told her once, I'm proud of that. But you're a good man, Lieutenant. A good man always knows his limitations.
You're a good man, Lieutenant. A good man always knows his limitations. You're a good man, Lieutenant. And a good man always knows his limitations. All right, everything's in the red except for well, one thing's in the red, Railtown. Genius Brands is up 6 cents at 92 cents. Finger is flat at 130. G-Bucks having a huge rally to 14 cents, up 2 cents. GDC up 10 cents at 475. Fingers now joined the delinquents and is in the red slightly. I struggle every day to come to you with new information. I'm just setting up, sorry, a little bit so I can have some coffee. We'll just go at it. Hopefully there's a new perspective here today, new ideas, something hits you differently. Railtown right now, the last trade is 0.409, but the bid is 41, 10,000 shares at 41. The ask is 42.3. The volume is 55,074 shares with, I really don't know how the volume got that. What jumped that volume? But the only trade I see is the last one, 1,500 shares at 0.409. If you guys want me to talk about, examine as much as possible the negatives, let me know, I'll do it. Argument can be on both sides of the equation. I'll tell you where I come down on Railtown. I believe that, one, the company was and is the first mover of the best-in-class product. I believe the company ran into AIP partners a year ago. They fell in love. It was a friendly transaction, and it's still not over with. I give up on that one. In terms of explaining it. You know, if I had to guess, my guess offends, so I won't guess. But I am unable to come up with a reason why Railtown would put at risk its first mover advantage. What? to be polite, to make sure everyone's feelings are okay. We're Canada. We don't do things the way that big, bad country to our south does. I don't know what it is. So you can hear that. You can see a negative side to the delay. And I just throw up my hands. I cannot explain it. I don't know why a company would put its entire first mover advantage at risk to be polite. But as you can tell, I'm not married, and maybe that's why. I'd have a hard time fighting for myself. I'll be frank. If that were happening in some aspect of my own life, and I had to fight it I'd be confused. I wouldn't know. Oh, did I do something wrong? Maybe I should. But if I were leading a company or protecting other people's interests, you couldn't stop me. I'd be at the offices. I'd be at the phone. It just would become pretty intense to get that thing done. But I don't know the situation. So my first assumption, Railtown has a first-in-class, first-market product. They met AIP. They both fell in love, and for some reason, that marriage has taken a year, and it's still not over. Thirdly, I think Railtown solves a real problem. Fourthly, I think Railtown is the key widget. What's a widget? It's the key tool that allows developer teams to take advantage of all this gigantic compute power and create the next software. I'm admitting I'm not a software engineer. I do not think Railtown's breakthrough per se can be made obsolete or somebody can get a head start. Somebody can beat it. But as long as they're silent, somebody cannot come out and pretend to be. LangChain? Has anyone heard of LangChain? Somebody can pretend to be. I do further believe that Railtown has 5 or 6 or 7 sources of revenue, which are going to be, from ground zero, they're going to be huge. In a rough and tumble world of competitors, I think they're going to be really, really good and growing. I do think that the multiples are going to remain high. I do think there is a arms race, and that companies ranging from Facebook, who parenthetically, I can't prove it, but I saw someone say the other day that Facebook spent $70 billion on Meta, on the idea that a whole new universe was going to be created online. Maybe that'll still happen when we're living underground and living in radiation shielded homes while the winds blow at 200-300 miles per hour in some dystopian future. Maybe all we'll have are those meta universes. But who knows? $70 billion. and it evaporated. Apparently, it's not worth anything. What that means, I think, is that Facebook is a hell of a business. Um, they generate a lot of revenue and a lot of income and a lot of growth. To be able to sustain a mistake like that is pretty impressive. But anyway, I do think that Railtown is going to be purchased, and I would imagine that a bidding war, if you want to call it, but I doubt up in Canada they would allow any bidding to go to the war status. It would be, are you sure you're all right? Are you comfortable? You know, maybe the T where everybody can just sort of politely have an auction. I don't know. But I do think Railtown's going to be purchased by one of the majors, and I think it's going to be at a very high price relative to today, and I think it's going to become clear that that's in the works, whether solicited or unsolicited, within 6 to 9 months. And I guess I'm sure I'm leaving something out, but I guess my final point is that I have decided to believe that this AIP transaction is what's holding up everything. But in the background, that the activity has been perhaps frenetic. It's like that Norm Macdonald joke. They said something about maybe allowing men who happen to be gay into the British Armed Services, and he made a wisecrack. Well, that brings up the question: how do you exactly do you tell if a British man is gay? Well, I would ask that about Canada. How do you tell if activity in Canada is frenetic? But this is what I believe is the core of why I'm recommending buying it. I think the company has, behind the scenes, been extremely active in software development. That's probably the wrong word. In marketing, in building their teams, and locking down future enterprise sales agreements, revenue deals. It is my premise that once, for whatever reason, whoever has this inflated power of delay, they get turned on by delaying everything. Gives them, it's a bureaucrat. Gives, we won't pick the gender, gives the bureaucrat a sense of power. Can't let this off my desk. I can't, and don't challenge me. I'll put you in the back of the line. I think once AIP is announced as completed, I already gave you my deadline, Wednesday morning this week. I think the stock will rise over the next fortnight and then begin a very steady back and forth movement to $5 or $6 by January. Once it's there, maybe beginning of February. Once it's there, I think the stock can double or triple very quickly if the revenues exist, which I believe they do, and if institutions come in to buy, which I've had a sense institutions and major buyers have been, there's like a wall holding them back. That wall is regulation. That wall is you can't trade on material inside information if you had it, but also you can't trade as if, I guess, you cannot trade in case you get accused of trading on material inside information. So I think the announcement of the AIP deal starts to break down that wall. There may be other reasons why that wall is up, but it is a fact that institutional buyers and large buyers, they don't pay attention normally to small price stocks. That you make your money elsewhere, and you have information. I mean, why? I mean, you can make anyway. You get my point. When you've got a lot of money to manage, you can make your returns in the bigger stocks, and you don't put your assets at risk. So, all in all, what I think is ahead is by Thanksgiving, I think the stock will, that's 2 weeks. That's 2 weeks. I think the stock will approach $1 or exceed $1 by 20 cents either way. By Hanukkah, I think the stock could be $1.50 to $2.25 range. End of the year, everyone's on vacation, so I don't know. But if anyone's still around with nowhere to go on holiday and reads the research reports and wants to get a jump on her competitors for the next year, it's possible by the end of the year Railtown will be significantly higher. But I've already told you January, maybe the beginning of February, $5, $6. And then that would basically give you March, April, May. I don't know, maybe $10 a month from there. It's all going to be predicated on telling the story, revenues doing it's like I show you on my valuation charts. Starting from this pre-seed round and then going up algorithmically, going up like a hockey stick. And I can't find my chart, but I've shown you that so many times. I think that'll happen in revenues, and that's what will drive the valuation. All right, enough of that opening enthusiasm. I can see that you have a lot of enthusiasm. GNS is an interesting story today. 61 million shares. The stock went as high pre-market as $1.56. Today, after the opening, it's as high as $1.06. It closed on Friday at 86 cents. Please avoid buying that stock. avoid any hype, avoid any dreams on that stock. To me, it's a crappy business model. It's a nice setup. The guy has built a resort area, and I guess he'll be able to spend the rest of his life down there, Mali or Bali or somewhere. And he's got the British accent. You got the girls from Serendipity, and life. What could be better? Except you're not going to make any money in it. If you want to look it up, when firms hire Mark Bazile's law firm, the lawyers make money. Absolutely. Mark Bazile is going to make money. You won't get out of the gate without him making money. But he's going to make money. And that means it'll go on for a while. How do you make money without billing hours? And then there'll be a big show, big fight. There'll be something that seems like proving something or other. And Mark will come across as on your side. Mark's only on one person's side, Mark Bazile. And he'll put it in context of all these moral issues. And I'm sure he believes it. I'm not trying to say anything bad about the guy. But you just got to know. The CEO will, perhaps after a financing, that's what I think's going on here. Perhaps after a financing, and time will go by, so you forget all this, so you forget all about it. It'll be a year, 9 months, 16 months. They'll settle. And both sides will agree to essentially hold harmless the other side. Citadel, and the other firm, Virtue, will disgorge something, give up something, and your stock here will go down to pennies. Now, maybe a miracle will happen. There's some other outlook. But if you don't believe me, just look up two companies. HPIL, and VNUE, Venu. Company settled. It's a win for the attorneys. We did something good. Good for shareholders, except shareholders end up with nothing. And the CEOs continue to have their salaries, their life, their wife, their kids go to the schools. You get up in this, you get caught up in this illusion that this CEO is a good guy and this attorney's a good guy fighting your good guy cause. It's not it. It's all about money. It's all about money. You start thinking about it as money. I'm not saying anything personal about anybody. Just realize they're about business. They're about money. You should be about money. Stay away from genius brands. There will be a financing in here, and it'll be seller boxed. But the guy will have his resorts down in the middle of the ocean. It's all my opinion. You can have your opinion. That whole thing is based on experience with watching what happens. Another story here is finger motion. guys, you know they're going to raise money. This is a company that does approximately, again by memory, and again this is all my opinion, does about 35 million a year in revenues. But I think they lose about 13 million a year. Lose. That might be the wrong word. You know, there's accounting and there's cash coming in, cash going out. And I'm not an accountant. I do know accountants can say almost anything, just like statisticians or your girlfriend when she's caught cheating. They can say almost anything. But Finger has announced with O'Flaherty or somebody like that, and at the so-called ATM, at the money, it is like an ATM for everybody but you, at the money financing, it's going to come. So they need some charm boying going on to get you to buy it, get the stock up. But I would stay away from finger motion like the plague. Let somebody else get sucked in. I'll show you a chart from a well-meaning guy, but he doesn't know what he's talking about on this particular one, in my opinion. Of course, it's opinions. That's what makes the market go around. It's in the summer, in June, when I was getting a lot of pushback on my concept that you have to make your own decision, but sell Finger, buy Railtown. Well, we can look back to my memory, and I wrote it down somewhere, but I'm not going to look it up. We could go back to historical prices and find it. I'm not trying to exaggerate or create something that didn't happen. I'm trying to just explain it from my memory. If I'm wrong, it's not meant to be misleading. If you don't trust my memory, look it up. You can quantify it yourself, but the gist of it's true. There was a woman on here that had 1,000 shares of Finger Motion. I believe it was at $5.50, $6 a share at that time. I could be wrong. Something like that. And it could have been a little less. But I suggested that what I would do as my strategy would be to sell Finger and buy Railtown. Now, Railtown at that time was under 30 cents, but it quickly went over 30 cents. So you can look it up. But in essence, her 1,000 shares of Finger Motion at that moment roughly bought almost 12,000 shares of Finger. I think it was, of Railtown. I think it was 11,600 and something. Whatever. Call it 11,000. Call it 11,000. Well, today, believing all of the crap about Finger, all of it, it's all crap. Not the company, not the management, but look, when you're in a stock, you have to stay away from the storms. If you're a trader, I don't think Railtown, the good thing is just buy it and, smoke a cigar. You don't have to trade Railtown. But look, you got to understand, Finger burns cash. In order to stay alive, they're going to have to raise more money. Now, that'll change. And the story, a lot of these good things will start coalescing possibly next year, possibly. And it seems like last year, the one we're in, Finger had a nice run at the beginning of the year. Maybe that happens again. Maybe that's a pattern. But until then, Finger has to raise money. Where do you think they're going to raise money? At $1.50? $2? Where do you think? That's right. I made this woman, I think she ended up buying Railtown, so she's okay. But if she were to do that trade today, she could buy I don't know. She could buy 1,280. She buy less, but let's call it 3,000 shares. It's a bit less. She could buy 3,000 shares instead of 11 or 12,000 shares. It's a huge difference. Being loyal, misguided loyalty. It's being in the fight. We're fighting. What the hell are you fighting? It's your money. Everybody else is thinking about money except you. You're in some loyal fight. Oh, I can't piss somebody off because they're a good guy. Or that lawyer, he's a good lawyer. He's in our fight. I'm going to be loyal. You're just being a sucker. It's all about the money. The only thing that matters is the money. A bunch of obfuscation and emotionalism, get in, close the trade, boom. Then we can go on to the next trade. It's all about the money. For the attorney, he just wants huge paydays. This is a milking machine for him and his team. For the bankers, so-called, they're not even bankers. If they can get you to be buying while some of them turn on the machines like GNS. This morning, it's clear GNS has turned on the machines. They need your money. They do a quick cross, so-called bankers. They just swap pieces of paper so that the shorts can exchange the cash by osmosis, they took out of your pockets, give the cash, funnel it through, close out some transactions, and Bob's your uncle. And they can still say, we're in the fight. This is my fight. Stop it. Stop listening to it. It's all horse manure. The only thing on the mind of the CEO of Genius is money. And whether he can fly first class down to his resort where the chicks lie out in the shade. I don't know what's on his mind, but it isn't you. In my judgment, of course, that's my opinion. The attorney, it's just money in his pocket and more guitars. That's all it is. That's all it is. As soon as attorneys start talking about morals and fights, just turn your head off. That's just all part of their sales pitch. And it's crap. They're just looking at you as a source of how they can pay their mortgage and keep their wife happy. Stop it. It's about money. Stop being in a fight that you can't win, and stop being loyal to something that's just false loyalty. None care about you. None care about you. None. So anyway, you got Finger here at $1.28, $1.29. Back in that summer, everyone got upset with me. Well, I think And I'm not trying, look, this isn't about me. It's just, I'm trying to train you to look at the markets with a jaundiced side, to look at the cold, hard truth. Now, it's hard to figure out truth. It's hard to figure out truth. But you got to do the best you can. And I predicted $1.25 on Finger. Well, it's not there. Oh, you're wrong. It's $1.28. Okay, I'm wrong. Yesterday, Friday, it went to $1.25. And you know, I didn't say what I really believed. I intentionally didn't say what I really believed because it's frightening. But I think now that the stock is $1.28.5, that you have to face the real risk that the financing is done at $1 or below. If that doesn't scare you, I don't know what to tell you. Now, will it? I have no idea. I'm not a seer. But I'll tell you, I'll ask you one thing. When in Finger Motion's existence has a transaction been done above market? I'll tell you one. There was a guy that's a friend that helped, and it's been on all these conference calls, that helped Finger by closing out the Lynn Partners transaction. I think he got taken advantage of. That guy stepped up and did a good thing for everybody, but I think he got taken advantage of. That's my opinion. That's the only transaction that's been foolish above market. Every other deal's under the market. Again, why? Because it's about money. Nobody else has this illusion of loyalty and we're on a team and we're fighting. And of course the stock's going up now. I have that power, right? If I'm saying it's going to go down, it's going to go up. All right. So now Finger's $1.30 to $1.33. Anyway, I'd be really careful. Look, by the way, I can be wrong. Maybe it runs. But I'll show you here in a second. Somebody that should know pointed out they gave a lot of stock and warrants to charm boys, and they don't do that unless there's a financing. Again, the company's not just doing it for an amorphous, hey, it's nice to have you out there. We're in this together. No, the company needs the stock price up to raise money. One thing about the stock market, if you start seeing it from the fact that the person on the other side of the table or on the other end of the phone line is doing it for I don't know what to call it, compensation, doing it for her own good, they're not thinking about you. It's all a sales pitch. You'll find rare exceptions to that. You'll find them, but not often. So I'm not speaking. If you wanna go gamble and start accumulating Finger for some reason, go do it. But I think you're just pissing your money away. I would wait until after tax loss selling, which is the next 6 or 7 weeks. So I'd wait till the beginning of the very last week in December, very beginning of January. If you want to buy a stock when no one else is buying, maybe the last week of December. Now, it could be sometimes these tax plays get inverted and you have to do it the last week of November. But I don't think so here, because they haven't financed anything yet. There will be a financing. Last year they did the one, shows up in the charts. They did the one, I think it was the middle of December. Took 40% out of it was at the market. The stock gapped down. It was priced, I think, 40% below the previous price. And you think it's going to be different this time? Well, I mean, if you want to be gullible, be gullible. But I think it's not about whether, I'm not trying to be right. I'm not trying to say anything negative. I'm just saying the odds are against you. It could turn out it works. Doesn't mean the odds right now aren't against you. There's two different points. The one point is, if you take the bet, the odds are against you. The second is the result. It could still work in your favor, but that doesn't mean the odds changed at the time you made the bet. Odds are way against you on finger motion, and there's people being paid warrants and stock to promote it to you, and those people are looking out for their own pocket, and it's not who you're thinking about, and they're going to sell stock and they're going to make money. Remember, everybody's trying to make their own mortgage payment. Everybody is trying to keep their wife happy. Everyone is trying to keep the wick lit. Don't be the gullible, I'm part of this, we're fighting. Don't do it. Don't let somebody else do that. Let somebody else do that. And then genius, what genius? What a genius. What a genius. I didn't even look it up. There was a reverse split in there that could knock your socks off. The only one that was bigger was the other smart guy. Smart is as smart does. Jeremy Frommer's, I think, was 500 for 500. Unless that was COSM. There's another one. How many times do you have to go through this to realize you're the sucker? And does it say sucker on my forehead? And that brings us to GDC. What's going on with GDC? Well, obviously it's a buy. All you got to do is find somebody to buy the company, and everybody gets paid out. It's wonderful. What the hell are you all smoking? I mean, maybe it could be true. It could be true. But do you think if there were $500 million there, I mean, this isn't like walking down the street to your parking garage and on the sidewalk is a $20 bill and you just have to bend over and pick it up. GDC's not, well, all you have to do is buy it because the stock is not reflecting $500 million in Bitcoin value. Does that make sense? $500 million? That's a lot of squid. That is a lot of squid. You think that someone's just overlooking it? I don't know. I don't know the mechanisms. But you have offshore companies, offshore entities, brand new entities. You have, I don't know, but I think offshore auditing firms. You can do your own due diligence. But to me, when I looked up GDC's most recent financials, the quarterly, there was, I'm using round numbers, there was an entry for something like 230 million in stock issued to acquire $1 billion, $900 million worth of Bitcoin. Well, I'm not very good at arithmetic anymore in my head, if I ever was. But if I take 900 million, let's just call it 200 million, take 200 million off, that's 700 million. Wow, what a deal. What a bloody deal. You can buy that stock. The stock doesn't give credit for $700 million. They put out a press release that some people believed without studying it. But they put out a press release that this is $22.50 a share. It's wrong. I'm not saying it was done on purpose, but it's totally wrong because it didn't allow for the existing shares. That number is closer to $15, 15 and a quarter. But even then, so you can buy a stock at $5 that's worth over $15, and it's been sitting here for 90 days, longer than 90 days. It must be a steal or a sting. It may work. If they can bribe, which is illegal, but I'm all for it because the system allows illegality on a massive scale on the shorting side. But if they give a trading desk somewhere $5 million and they set on their algorithmic computers to fool the world that there's real buying, Flash Boy style, and on top of that, somebody gives them $100 million to play with, they might be able to make this go up. You be the trigger. Key part is you get the stock coming up unpredictably, and then the short machines keep shorting like they always do. They get confused. They're just algorithms. These out, and then you're in the middle, and all of a sudden it catches and it zooms, and you're waiting for 1,000. The wealthy people are happy with making $50. And it's pre-market, so you can't even take advantage of it. That could all happen, but it's not because the market has somehow missed $700 million, roughly, of value in Bitcoin. I just don't see it. Well, it's a small stock, they're not paying attention. Really? Really? What are you saying? Are you saying there's a large short on the one hand, actively involved in destruction here, and they're not paying attention? I don't know. On that balance sheet or income statement, I can't remember which, there was another entry, and it said, again, approximately 690 million. I can't remember the exact, it's over 600 million. Additional paid in capital. What, for nothing? For nothing? If you're the billionaire, are you going to bend over, pull down your pants, and allow somebody to take liberty with you for $700 million? It doesn't make sense. It doesn't make sense. My guess is there's a side letter, or there's a explicit agreement to issue more shares. Or there's an escape valve. Look, you put your Bitcoin in your repository. We'll say the audit, it's in ours and we bought it. And if we can make this work, you're going to make so much money, you'll be happy. But if not, just unwind it or don't deliver it or take it back. Well, wait a minute, it's audited. Well, okay, it's audited. You want to bet on that? I don't know, guys. You're being charmed again. And I understand it. It may work. It may work. But the odds are so stacked. This is not a loyal fight. Everybody's looking out for themselves, except for me and my monkey. I understand it. Railtown has done jack shit. It's 42 cents. So you could say I'm talking my book. Maybe. There's no question that when you're invested in, both literally and in weeks, months of time in a story, that it changes your perceptions. But that can be neutral, and it can work both ways. It can cause you to be so blinded that, like Bill Miko accused me, I'm so blinded I can't see the risks, which is pretty insulting. But it could be, or it could also make you hyper attentive. Oh, they're a bunch of incompetent. They don't know what they're doing. Where's the news? If there's real news, why don't they put it out? Well, I told you they can't put it out till the AIP deal's done. It doesn't make any sense. Where's the news? The circular, it can almost drive you crazy, depending on your perspective. So there's no question that I think I'm intensely aware of everything I can be aware of in Railtown. I don't know about these others, so you have to listen to others. But my experience with some of the advice on those conference calls, which I used to host quite a few of them, the people making the comments often say, well, I don't really know either. It's just called to my attention. Guys, stop thinking you're on some sort of team. Now, I think you're on a team with me, but look, I don't know what to say about that. I know that I'm no different than any other human being. There's nothing special about me. But my motives, like that line in I don't think it was Deadpool. Anyway, when the cops are killing a bunch of people, and they try to get Harry to join, he said something like, I think you men have misjudged me. And I don't know why, but I've been giving this Railtown idea my all. And I have no relationship with the company. I have not been promised anything. I haven't been given shares, millions of warrants. I haven't been giving cash. You know, some months I don't know how I'm going to pay my internet hookup, at least. So I don't know what's motivating me. I know what I think is motivating me, but you can doubt it. You have every right to doubt it. But I do think we're working together here. And if we stay together, we can build something together. But that's pretty amorphous reason to be doing everything. My goal with Railtown is so that you get your money back, so to speak. You get your red back and you can turn your green on. And hopefully that green more than pays for everything. And I think we are together in that. So, that's contradictory to what I just said about this other shame game that goes on. Shame or sham? Look, I don't know the difference. In some ways, it'd be better to deal with somebody who is intentionally robbing from you and they let you know and you still do it. In other ways, somebody who is presenting it as if, and I'm not talking about any specific person, they're on your side and it's this glorious fight. It's my, the drum major, it's my fight against the shorts. It's all crap. There's only one thing the drum major is looking out for. If he can find it. If his girlfriend can find it. All right, I'll go through this. Railtown is 41 to 42.6. The last trade 41.9. The volume is 56,000. And the ask is 42.6. So it's got a Senator Alan Craig style spread. Considering nothing's happening, that's pretty good. All right, let me go through your comments. And then I do have some things to go over with you. Nothing particularly new, but maybe a different slant. And I want to encourage each of you to buy Railtown. Don't be frozen here. I know there's this doubt and all that. They want that. Look, the rates of return I'm talking about don't come for free. They come with this uneasiness. They come with this time, and they come in a vacuum. You're looking for confirmation. By the time confirmation comes, you'll be paying $2 a share. So you got to take a deep breath. The time to build your position is here. And then you got to block out a lot of the other stuff. But anyway, let me go down the comments. Hey, Red Pepper Ronnie, you're first today. How are you? Hey, Pat M. Good to see you. Number 2, Red Pepper, how are you doing? How am I doing? Well, I guess I'm doing fine. Well, it seems like it was just the other day. Ain't it funny? That's a different song. Hey, Chad, how are you? Hey, Jim, how are you? Hey, Fast Eddie, how are you? Hey, Jack Hamilton, good to see you. Jeff Schultz. Hi, William. Question for you. In your opinion, when do you think RT will spike up? Well, I think I gave my answer. I'm not telling people it's going to spike. Well, let me say it differently. I'm not telling you to buy it because I'm calling for a spike. I'm not doing that. I'm trying to give a fair assessment of what could happen to the price of the stock. And I don't think you can wait to buy it because of a risk that the stock is going to dramatically go higher quickly. But I have no idea what you mean by spike. So I'll just walk you through what I think is going to happen to Railtown. I checked my notes from essentially a year ago. And I think at that time, Railtown had a similar story, but I think a couple, maybe three of the tools. I'd have to go back and listen, but I think they now have 5 tools, maybe 6. And I think back then they had 2 or 3, but commercial. But it doesn't matter. It's all one platform. And so I think that there's been improvements since then, but it was a similar story. And that's what intrigued me about the story back then. You have a company solving a problem, first to market, building customers, and in bed with Microsoft and other companies. But let me just pick Microsoft. So Microsoft's an obvious buyer. It's still the same story. But what came in the middle is this AIP acquisition, which I just, for the life of me, it's either a big fog bank or it's legitimately, I don't want to use gentlemanness, but it's just kindness. Just being kind. All right, if it takes 12 months, take 12 months. I can't understand why that's taken so long. But what I think is going to happen with Railtown is you're going to see this week, I'll try to, let me write it down as I go so I can be accountable. By Wednesday this week, they'll finish and file. I don't know if they'll announce. So they'll finish and file AIP. I do not think that's going to do a lot to the stock price immediately. I think it will take 1 to 3 trading days at best for slowed down or held back buying to maybe start coming back in, jumping in. So that takes it to the following Monday. What could happen between now and Monday, other than the AIP filing that's finished? I suppose you could see some of this backlogged revenue being announced. I don't think they're ever going to announce. They've already shown us they do not announce revenue. So I'm not sure they're ever going to announce revenue. But they might describe deals, so you got that. So I'll call that revenue deals, possible. And the other thing is, And I put it here to show you. I reread that TELUS announcement. That's one weak-ass announcement. It doesn't say anything. So I think additional TELUS clarity could come. So this week, I think you're going to see that the AIP deal is acquired. You know, the press release said the deadline was Friday. We just passed. So I think that'll be filed with the regulators. I assume all the paperwork has been worked out with the various people involved, and the politeness has run its course, and kindness, and you know, take your time, we can wait. I assume that's all going to have run its course, and that the regulators are going to accept it. So I think by Wednesday that'll happen. And it is possible, I don't know how likely, that we'll see some sort of further, you know, revenue announcements because of the pipeline they have. And it's possible that TELUS will give us some clarity. What do I think that means, to get to your point, Jeff? The stock right now is 42 cents, 41.9. I think the stock will be 42 cents all week, give or take 2 cents. I don't see the stock going up this week. I think it's going to be sideways this week. So next week, Monday, it's possible some of those buyers who had, some of those buyers who have been supposedly on the sideline could start stepping in next week. Or not. That's a question mark. We'll find out. Next week, I would imagine, and this week, but I really would think next week, the company starts or continues telling its story to, I hope, to institutions. In terms of potential news next week, it would be those same two items. Possible disclosure of some of the revenue pipeline, and possibly TELUS clarifies or updates. But, you know, up in Canada, it's still it's socialism up there. It's government, you know, so it's slow. All right, so that's next week. That's Thanksgiving week. The week after Thanksgiving is the first week in December. It's Monday is the 1st. So what happens on Monday the 1st that week? The annual meeting is the 17th. Okay. So I'd say what could happen that week? I think the same two dynamics could, if they haven't already been fully disclosed, you could see possible revenue from pipeline. And you could see if TELUS hasn't done anything previous, you could see a TELUS update. That's the first week of December. But I think what could happen in the first week of December that would be different is research. And I would expect, Jeff, that research is going to come from more than one place. But first, it'll be that capital research group, probably, because they have their turf to defend. So I would say research would come out in the first week of December, possibly more than one. What else could happen? Well, I think he would continue telling his story to institutions. And that means that'll be the third week, essentially, or the beginning of the third week of the company being able to open up to the world once that AIP deal is finished. That'll catch in at some time. So I'm going to say in the first week of December, buying comes in. Buying that you haven't seen before. Now the problem is it's coming up on the holidays, and it's after most institutions have calculated their bonuses and have cleaned up their portfolios so they can go in and pitch to their retirement funds, their brokers, their clients, hey, look how smart we were all year. We're in the top quintile or the top decile. And they don't want to futz with it too much. But I think other buyers may be convinced because of research. Maybe there is some revenue deals clarified. Again, I don't think they're going to give us the revenue, but as long as they're telling institutions or investors that sign NDAs, I think buying will come in that first week in December. And then the second week in December, I just think it'll be more of the same. But I think the key difference, I think the buying could accelerate. But then you've got, in the third week, you've got the annual meeting. And then the fourth week is Christmas. So that's the holidays. So I'm going to say the third and the fourth week, nothing particular happens. It's neutral. I'm going to say that's neutral. So I guess it comes down to what I think will happen in this week, next week, and the first 2 weeks of December. And again, I'm not doing this for a spike. And if you're looking for a spike, go find a different stock. This is not hot money, Jeff. It's not hot money. But I would say this week, we'll close the week right where we are. It'll be 40, let's just say it closes the week at 42 cents. I don't think it does a thing this week. Next week, that's Thanksgiving week. I think it could go to 50 to 75 cents next week. But I would emphasize the 50 cents more than the 75 cents. And then the first week of December, I'll continue with that 50 to 75 cents, but I'll increase it to 50 to $1 with a focus on 75 cents. The second week of December, I'll say 75 cents to $1.25. So I think it'll be over $1 by the middle of December. Then I think it's because of the delays, which I guess were strategic or just out of kindness. I think the holidays go by with a risk of selling or buying, and it's a wash. And I think the first week of January is holidays. So second and third week of January, people are back at their desks. They have research. They probably have a new investor presentation. I'm sure the company will work over the holidays. I'm not sure about the institutions, but I think that'll be a fresh start. And so I would expect in the middle of January, the stock will start getting buying. And I think you can see it $2 to $3 to $4 to $5 by the end of January, beginning of February. Once the stock gets to $5 or $6, maybe by the middle of February, it can quickly be $12. But I'm not in this stock for a spike. I'm in it for its march to $10 or $15, maybe higher. The story being told, and I think the valuation is going, as I've always shown you, is going to start to go up like a hockey stick as the story is known. Railtown is better than Langchain. It's not as good as Langchain in that, out of kindness to regulators, attorneys, bureaucrats, Railtown's decided to delay its first mover advantage and give that first mover advantage to Langchain and Sequoia. I think that's an own goal. I think it's an unnecessary mistake, but it's happened. I still think Railtown is superior to Langchain. And there's plenty of room in a $300 billion a year spend for two companies. But it's going to be two companies now. That's the cost of being kind. But hey, it wouldn't be kindness unless it came with a cost. So you think, Jeff, I'm looking for a spike. I'm not. And if you are, you're hot money. Take your money into a hot money stock. But as I've shown you many times, sorry for those noises. Jeff, this has started about 6 years ago, and there was, using modern vernacular, there was money raised at the pre-seed and seed rounds, and the stock was going up this, I think 10 months ago, it was going to climb up this value creation here, and up here, just to pick one company to keep the story. Just to keep the story consistent, up here, Microsoft buys it out. I mean, there's plenty of companies out there, just to keep it simple. But this was the path the company was on, and the buyout, this movement upward is proving concept, getting revenue, and you get this algorithmic movement in value. It's a hockey stick. And then Microsoft comes in and buys it almost on an arithmetic price. At least that's how it works in oil and gas. Now, Microsoft might have more of a return expectation when they buy it. Well, what came on here, Jeff, is they ran into AIP. So it shifted this curve to the right. The bottom is time, and this is value. So it just shifted everything. So what's happened, it's given you, me, others, an opportunity to buy the stock at the seed price in the open market. To me, nothing's gone wrong in here. It's just we've had this period of time, which I'm not able to call it what I want to call it. So it gives me this big gap in vocabulary. But from February 11th until this week, none of the buyers associated with AIP, Railtown, Omers, Mavericks, all of the 180 companies can buy. The majority of the buyers can't buy. And the daily shorting goes on. And there's no discussion from the company. I don't know what to call that period of time. I thought I had a pretty good name for it, but I was admonished that I was wrong. So whatever you want to call this period of time, the company hasn't been able to talk about what it's doing. It has not been able to campaign to buyers that can change the price. And it's given us this whole long period of waiting, which is annoying. but it's also given a chance to buy the stock. It doesn't change the curve. It doesn't change the curve. That's the value. Now, what's happened recently is the company TELUS made, out of the left field, TELUS made an announcement. The company has made 2 announcements about AIP. The company has announced their annual meeting. They did put out an investor deck, which I think contains tremendous information in it. So the company, and they've made about 6 or 7 revenue announcements. So I think there's a lot going on. But you and I are trained, well, what's the price doing? So we're trained that the price is telling you everything you need to know, which I think on its face is a really specious argument. Why would Warren Buffett buy Geico or Washington Post? But whatever. But if you're hot money, like you are, Jeff, maybe that's important. Now, what we're waiting on to get this curve, which has been shifted out, what we're waiting on to see this valuation curve to go up, essentially is information, a definition, at least to big buyers, of a ramp to revenue. Now, if revenue ramps from 0 to 50 million or 100 million, value is going to go with it on this hockey stick upward. I've drawn this so many times, and it must not be effective, my drawing. Well, what revenue could come once AIP is announced? So, Jeff, where revenue can come, and remember the goal, Jeff, is for the company to be able to talk about it, to put it in a believable projection for the next 12 months. And it's a rolling 12 months. Every month, the forward 12-month projection can get bigger. That starts after AIP deal closes. Again, I can't give you an explanation for why any CEO would allow an AIP acquisition, friendly acquisition, to take a year. I can't give it to you. There may be a reason, and it may be very logical. But I think it's an insane risk. But hey, I'm the asshole. He's a good guy. So you've got three different sources of revenue that overlap. Now, because of TELUS, you've got revenue from hosting of AIP network on TELUS. That's going to be revenue sharing. You've got revenue from TELUS's clients being told to use Conductor. Now, I don't know what percentage. We want to find that out. And you have Railtown bringing Railtown's other clients and new clients to TELUS. This is a huge revenue sharing area. It's a huge area. Now, by the way, all right, I got it here. This is the hosting side. This is huge. And then you have Railtown being able to cross-sell to the AIP network, doing enterprise sales agreements, and getting revenue from the use of Conductor by those 5,000 end users growing. And you have Railtown's own customers from its own marketing, and those are enterprise sales agreements. These will host on TELUS. That's additional revenue, but there's revenue from these deals. We would love to hear about that. And then you have AIP. You have the cross-selling. So the AIP network companies cross-sell, and they use Railtown's product, and they host on TELUS. But there's revenue there from the cross-selling as it comes into AIP and it filters to Railtown. There's new network associates who will join Railtown, AIP, Railtown. And then there's the roll-ups. Here, Jeff, is $400 million in roll-ups. So as TELUS and Rail add value to the stock, and as the stock price goes up, they can issue fewer shares. Now, the shorts want massive shares, but that's not going to happen. They'll issue a few shares to acquire revenue, and eventually, out of all of this, let's try to break down what some of the revenue could be. I'm going to say by the second quarter. What could the revenue be projected going forward? Ah, in no particular order, in 5 months from now, I think from the roll-ups you could have 100 million in revenue forward 12 months. I think from the hosting you could have 25 million forward revenue, and that's the hosting from AIP. New revenue from Railtown clients outside of anything we're talking about, I'd say 25 million. You know, find 25 customers, $1 million a year. AIP revenue from cross-selling, I'll say 10 million. TELUS revenue, and this new revenue would, I guess, include cross-selling. Anyway, TELUS revenue that they send their customers to Conductor, 10 million. I think you could have 170 million in annual recurring revenue toward, let's say by May, that becomes evident. May, forward, I will say by May, you could have a forward estimate of annual recurring revenues of $170 million. The multiples being paid for this are as high as 200, but let's just multiply that by, I don't want to use 25 because I think that's too low, but let's not use 50 either. Let's use 35, which is, or was, until the last week. SoundHound's multiple, 35x. SoundHound is anticipated to do 170 million, give or take, next year with zero profit. And it trades for 35 times revenue, or it did a week ago. So that's 6 billion. And to get revenue from roll-ups, you're going to have to issue shares. I don't think they're going to issue very many, but let's just be conservative and assume that they issue enough shares so that AIP's side, it's 49%. Railtown still maintains control with 51%. So that'd be around 124 million shares. Let's call it 125 million on top of the existing 225 million, which I think will be issued. So that's 350 million. We'll divide by 350 million. The current amount of shares outstanding is 222,250,000 approximately shares, fully diluted, assuming all 50 million shares go to the acquisition. So let's divide that by 350 million. That's quite a buffer for issuing shares. Okay, so Jeff, you're looking for a spike. I suggest you get a drink somewhere, but I'm looking for you to make money, not a spike. Again, this is May. This is May. I think the forward 12-month estimate in May will be 170 million in revenue. At a 35x, which is Soundhound, which makes no money, Railtown will probably do, I would guess, 60% or better in margin. It's a hell of a lot of money coming in. And at 35x, using 350 million shares, that gives you a target of $17.50 in May. Now, if you use 70x, which is just a multiply by 2, gives you a $35 target in May. And if you use 100x, which I think, given that the multiples are 150, 175, 200, 250, is possible, you have a target of $50 in May. Now, if you're looking for a spike, go have a shot of courage. But if you want to make real money, Jeff, you'll take that brain out, put it over on the shelf, put on the brain. This is an investment. This isn't hot money. This money is not competing with genius brands who just hired Mark Bazile to lay out a lineup of propaganda that they're actually going, in my judgment, that they're actually going to do something for shareholders. And so everybody gets excited. There's some talk on the conference calls that they bribe somebody to turn on the machines and the stock goes up. That's a spike. You could have traded that. Man, we could have traded that. I got to go trade it. If that's your brain, Jeff, go lose your money. But if you want to make back the money you've lost, I'm not picking on you per se. I'm using your question as an example for everyone. You got to put that all aside. You just got to go save your spikes for your orange juice and your hot toddies. Railtown's slow, damn slow. And it could be slower. There's no urgency in Canada. What other country could come up with curling as a sport? There is zero urgency in Canada. None. But progress is made. Things roll forward. There's some advantages. The AI factory, the data center, is built. It doesn't need financing. It's not, you got to go find the land and the power. And it's all built. It's powered. It has NVIDIA chips. They all want to stay in Canada. So the good thing about Canada taking bloody forever to get anything done, they're not going to switch out. Once they move that business, it's going to stay there. So Jeff, my target for May 5th remains the same. And if I'm wrong, I'll blame it on AIP taking forever. But if I'm wrong, I'm not going to blame anybody. If I'm wrong, it'll happen later. It'll happen later, I think. Not too much later. $55 May 5th. if you're looking for a spike, like I say, just sit around the fire, add it to your hot cider. I'm telling you, this is not hot money. Don't talk in terms of spikes. But I understand the frustration at the same time, Jeff. As I've said to you, I'm not being paid to do this, and I'm imposing on I'm imposing, let's just say that, to get through this. Jack Hamilton. Good job, Jack. Good job, Jack. Very good job. That's excellent, Jack. And I didn't add in, somebody else added over the weekend. Jimbo Whitefire, I think, if I'm reading my. So you two, that's great that you guys added. Jeff Schultz, I have 0.416 on Railtown. Yeah, I have 0.419 now. I have 41 bid, 4204 ask. It's still 56.79. Same 1,000 shares, which oddly I show at 9:30. I don't think that's accurate. See, I don't think you can trust time and sales. I think it's all a bit manipulated. But that'll end. I think a real market is going to evolve. Hey, Donna. Hi, William and RT Crew. Hi, Donna. Donna M. Hey, Jack, congratulations on. I agree with that. Perfect. Railtown. Hawaii. I not Bank Hawaii. How are you, JCB3? That's awesome. Added 86 shares. I love it. I love it. Go RT. Justin Babish added 400. That's great, Justin. You're over 50,000. That is awesome. Austin. That's awesome. 50,000. It's a good number. It's a good number. David. Oh, here's David again. How can you say Finger is crap and then say the company is not? And it's nothing against Martin. Sorry, but something is off in your opinion. Well, you're welcome to your opinion. If you want to hear it as an attack on Martin or the company or its business, that's how your brain is set up. That's how you process information. I can't help that. I'm not going to change it. But what I'm saying is that Finger Motion, the stock, Finger Motion, the method of making money over a 90-day, 6-month time frame is crap. What's against you, David? But I understand you can't process it. I like Martin. I like the company. I like the investors. I like the future potential of their story. But it requires execution. And the other problem is it requires capital. So here's your headwinds, David. It's now November, and you said this to me when the stock was 550 and 450. So now I'm having to restate my case when the stock's already down $3-4 a share. But I'm still saying it, which is pressing my point. But I don't think the stock is cheap. The market cap of the company is 82 million. You've got a company that does revenue of roughly 35 million a year and loses money every year for 3 years in a row. I'm not saying it'll continue doing that. I'm not saying that the company doesn't have a great management team and great trust in China, and that there's not a future for minutes and uh, uh, crisis and control, crowd and control and commitment. The C2 contract. The C2 contract, that could be big. They decided to go slowly on it. I'm not saying that big data won't come through. In this time of AI, their data could be amazingly powerful. If their laboratory transforms to AI a bit, you could have MetLife or Pacific Life Re step in with a great revenue generating strategies. On the other hand, competitors could come in the time of AI. So I think investors, David, not you, and not maybe our whole group, but new investors to the scene are going to look at it and say, well, they do 35 in revenue, they make no money, and they're trading at 82 million in market cap. So I'm going to pay roughly 2x, a little over, 2 times revenue. And what am I getting for that? David, that's a hard sell. So for the time being, I think the raise, there's a real risk, David, that the raise that's coming, because one is, will be at $1 or under. I could be wrong, but it's a risk. That's what I mean by crap. You know what happens under $1, but maybe not. Maybe not. Maybe something else will happen. Secondly, tax loss season is coming. So people who have losses are going to sell the stock. That has nothing to do with the company, David. That's just knowing that that's coming. It may not happen this year. This year may be different. People decide to hold on to their losses and ride them out instead of establishing tax losses to offset gains elsewhere. Against the stock going up over the next 40 days, 50 days, 60 days. It's going to be an offering. It's going to be tax loss selling. And then there could be consequences if the stock declines from here that you know about, David. It's not me. Of aggressive attacks on the stock price. And that's going to be hard to fight if it happens. So that's what I mean by crap. That's not saying anything bad about Martin Shen or his team. And in fact, I'm not saying that next year in January or February, there might not be a trade in Finger. But I think, unless you just want to piss your money away, I think it's better to wait until January and February and see how the stock is trading then. I'd rather pay a little bit more and know I'm going to be riding a wave upward. if you really need to play finger, this is probably a good time to buy calls. Um, I don't know. I'm not recommending it, but if you really feel the need to be in finger, you can go all the way out to next January. You could buy the $1 calls for 70. You'd probably buy it a lot cheaper than that. You'd probably get them for 50 cents next January. The following January, January the 28th, hell, you can buy January 28th for I don't know, $1. They don't really have it might be $5. That might get expensive. So you could buy January calls, David. You could, I don't know if you own the stock, but you could sell the stock, establish a tax loss, and go buy double the number of shares in the January calls. And, you probably wouldn't net out. You probably wouldn't have any cash left over if you did it that way. But at least you established the tax loss. But those calls can get cheaper. And for me, I'd rather buy as I see it going up, and that you might get that trade in the first quarter. So I hope I've explained why I think it's a crap trade situation. But if you're lost in, I got to be loyal, therefore my best way to be a good guy is to lose all my money, I mean, that's fair enough. I mean, it's all about what we feel good about. Jack Hamilton. Hey, Donna, trying to get it while it's cheap. You got to get it while you can. Josh Moore. All right, Josh Moore. Josh, you don't work with the guys on Borough Square, do you? Something about your name leads me to believe you might be associated with the shorts. Is it possible? Joshy Washi. Is this what you follow all the rules in the book, but when you go against Goyim, it's all right? Is that what goes on, Josh? Shame on you. Don't fall for this scam. Josh Moore. Same shit as GTI and Finger. Don't buy this turd. Well, it's not the same, Josh. Are you short? How many shares you short? How many shares did you short? What are you trying to make today? You needed to break under the 200-day moving average? Is that what you're trying to do, Josh? What's your position? Good luck. Good luck. I would say that if the company takes too much longer, breaking free of this self-imposed doldrums caused by the AIP purchase, you might make some money in the short run. Doesn't change my story. You might get a spike downward that you can cover your shorts. And Josh, why do you have to make ad hominem attacks when you don't even know the story? Because you're short. Good luck, Josh. Oh, that's mature. Poo-poo on a stick. Well, I imagine your case, that's where you place sticks. Josh Moore, they are doing it to steal your money. Who's they? Who's they? I think it's you. Ah, ah, ah. I just figured it out. It's projection. It's projection. That's how you live with the fact that your behavior is in complete contradiction to the rules in the book. You project the bad behavior on others. I got it. That's a good psychological ploy, Josh. It's a good ploy. Justin Babish. Thank you, Justin. Everyone here loves William, and we hate you, Josh. Good comment. Jack Hamilton. Justin B. Yeah, I like that. That was good. That was good. Jack Hamilton. Thank goodness the shills are back. I do like confirmation. We're on the right track with Railtown. I agree with that. They wouldn't be here unless they have a position to defend. But remember, their position can be very short term. It can be an hour. It can be a day. It can be at 2 weeks. It has nothing to do. It has nothing to do with 55 by 5. Now this maybe needs to be pushed out a bit, but I really think if the company can show 50, 100 million, 150 million in highly profitable revenue as a predictable glide path or whatever you call it, let me show it to you a different way, Jack. Lang chain, which is not as good as Railtrack in my judgment, but it is good in the sense that it's got Sequoia behind it, and they're out spending money getting the name out into news stories and into Wikipedia, not Wikipedia, but getting it out there. But Lang chain, which is private, well, to be as conservative as possible, Jack, Lang chain raised 125 million at a 1.25 billion dollar valuation for June this year, just for June. That was their sample size. June revenue annualized at 12 to 16 million a year. Just June, that was the size. So that got 1.25 billion. If you use that number, and right now there's 225 million shares outstanding, fully diluted. I went to 350, which I think is way too many shares to get to 16 million in revenue. But let's do it that way. That gives you a $3.50 target just to catch up to this valuation for Railtown. And that's the beginning of the story. That's not the end of the story. DMAC, purchase 500. Awesome. Appreciate you coming on. Patience is key. Something good is just around the corner. Thank you, DMAC. That's excellent. Excellent. Excellente. That's excellente, as they say somewhere. Pete the Greek, Opa. Novak Djokovic is now a Greek resident of Greece. You got the good ones. Justin Babish, take comfort in knowing there isn't any risk of RT going to zero or dropping out from under us, which is how we lose in other scenarios. Yes, that's true. Look, Justin, I think it verges on inexcusable that the paperwork has taken so long on closing the AIP deal. On the other hand, it is what it is. Life is life. Life is such, as my dad used to say. And we just got to adapt to it. I don't think the company's been sitting on golf carts and, going to half price deli evenings to get a tuna fish sandwich and bring half of it home to their wife. I don't think everyone's on vacay. I think they've been moving forward. And so I expect Railtown to come out of the gate strongly, but we'll find out. Could Railtown go to zero? I don't think so. As I just showed you, I think the TELUS deal, which hasn't been fleshed out very much in this period where nobody can talk about anything. But if we just focus solely, we threw away everything else. We just threw away all other sources of revenue. And we didn't look at a single other thing. The 175 companies currently in the network of AIP networks, which Railtown, I think by Wednesday, will own, they spend $120 million a year So, Justin, right now, 120 million is spent annually by, good Lord, my hair looks like I had a good night last night. 120 million is spent to host their tools and their products across 175 companies, and it's hosted elsewhere. This is going to move to TELUS. Now, this is 175. They're already up over 185, I think the paperwork says. It might say 180. But as this number goes up, that number is going to go up. But anyway, let's use that 120. I don't know. I don't think the revenue sharing is going to be 5%. I don't think it's going to be, I don't think it's going to be 30%. I think those are two ridiculous choices I just made. But what is the midway? 17.5? I don't think that might be high too. Let's just use let's use 15% revenue share. That gives 85% to TELUS. 15. Yeah, let's just use 15%. So if you have 120 million, and you don't know if it's all going to move right away, but it doesn't have to. It just has to. It just has to be projectable that it's going to. But let's just use that. That's 18 million in ARR, Justin. What do you see when you see 18 million in ARR? At 100% payout, at margin, 100% margin. You know what I see there? I see $1.5 million coming into the company every month. So they don't have to go to the market to raise money. But also, if it's only 18 million, I would use a higher multiple. Let's just look at it. 1.25 billion. Uh, 12 to 16. Let's call it 14 million. Is there what they're going to do this year at that's the wrong way to put it. It's what they valued the deal at in the snapshot of June. So that was 89 times. All right, we'll use 89 times. 89 times 18 million. It's just a snapshot. So it's 1.6 billion. This doesn't require any issuance of shares. This doesn't require issuing any shares. So I'm just going to multiply it by 225 million. That's $7.12 a share. So Justin, if the company were to do nothing other than focus on getting that 120 million over the hosting over to TELUS, but they didn't roll up stock, they didn't spend money on getting other revenue, they didn't make any other deals, they didn't do anything else, so they didn't issue shares, they'll have 1.5 million a month in revenue. They'll pay for a lot, and the stock will be worth, as a snapshot, based on Langchain's value, $7 a share. Just on that. And that just has to be projected, by the way. Langchain's revenue was projected on 1 month's revenue. So anyway, Justin, not only do I think it's not going to go to zero, I think it's going to go up just to get started. So Mike says, so William, if the acquisition didn't happen, how long would do assume it will take Railtown to move on its own products? So if the acquisition did not occur, I don't think that's a valid question. They announced they made a total of 3 press releases, Mike. One was February 11th, that they had signed an MOU. That's a disaster to put that in the headline. Then they made an announcement. They filed October 6th and announced October 8th that they got approval and they're going to close. But there can be no assurances, all that crap. Then last week, and I might be wrong on that, either last week or the week prior to that, it was around November 6th, whenever that was, on or around November 6th, a Thursday, they made another announcement saying, we already made the announcement. This announcement is to announce that we intend to close and make another announcement we're going to close on November 14th. And of course it has legalese in there. But they had 52% of the vote. So I think it's the wrong question. I think the deal is closed. They've gone to conferences together. TELUS just signed a deal with them. I don't know if it referred to AIP as I'm thinking about it. So maybe that's not a good argument. So I don't buy your premise, but if you want, let's go with your premise. They still have the hosting deal with TELUS. So I would say TELUS is very slow. So I would say it's going to take many, many months for TELUS to start moving TELUS's clients over to Conductor. 90 days, 6 months. But once it starts, it'll be steady on. I think Railtown, I can't know for sure, but Railtown has been marketing its products for almost 2 years. The research report from Capital Reports, or whatever it's called, came out a year and a half ago, talked about it. They talked to their customers and got excellent feedback. Even if the deal didn't go through, I think there'd also be cross-selling that's already occurred in the AIP network of 5,000 end users. And the company has already announced about 7 revenue transactions. So I would guess the combination of all of that and the ongoing, so the existing beta group of clients, which the research report confirms, the cross-selling that's already occurred within the network, even if the deal doesn't close under your scenario, those deals are going to go forward. TELUS is going to bring some or a majority of their own customers over to Conductor because it seems like it's a key interface. And then Railtown has been working on its own customers, its own marketing, both in the Middle East and elsewhere. So those 4 avenues, which have nothing to do with the closing of the AIP deal, that has nothing to do with rolling up AIP, I think those revenues will start. Remember, they don't have to be booked. They just have to be believable for the forward 12 months on a rolling basis every 12 months. I think that'll happen. Look, I don't believe your premise, but if the deal didn't close, they'd have to announce that almost immediately. I'd say they'd announce that within a week, and then the company would go on a full court press to start disclosing other revenues. I think that revenue run rate would become recognizable by the third week of December. I think it'd be very, very quick. And it's valuable. It's enormously valuable. Again, for 1 month's revenue, June, projected to be between 12 and 16 million, Langchain was valued by Sequoia at 1.25 billion. They don't make any money. I think in your scenario or in my scenario, Railtown's going to be able to show by the middle to the third week of December convincingly, maybe not publicly announcing it, but maybe showing it to institutional investors. I think they'll blow away Langchain's moment in snapshot in time, June revenue annualizing at 12 to 16 million. I bet behind the scenes, Railtown can show 10, 12, 15, 20, 30, maybe even 50 million to their knowledgeable customer base sometime in December. I'm not saying booking it. I'm saying projecting it for 2026. And if they get a multiple by those investors, like if Sequoia's correct in Sequoia's evaluation, it is conceivable that Railtown by January will have a $5 billion valuation. Divide that by 200 million shares. That's not the right number. Divided by, because you're saying the deal didn't go through, so you got to divide that by 175 million shares. You got a $28 stock in January, Mike. So I actually, it doesn't frighten me if the deal doesn't close, but I think your premise is 99.999% not correct. Daryl Valentine, why I don't buy any of the finger influencer stocks. Word on the street is this or that. Doesn't happen. Going to 1,000, wow. And then when it runs to 5 or 70, he says, shame on you for not taking profits. Well, that highlights, Daryl, the other problem. And it's difficult. It's the hardest decision to make, is selling. The one thing about Railtown, I don't think, look, this has been a long time. And the momentum is flagging like Josh, I forget what Josh's last name was, like Josh's love life when a position is going against him. The hard thing to do is sell. And I'll take just me. I'll go with me. When I believe Finger was squeezing, and COSM was brought to our audience with great fanfare, and it popped that. Well, I didn't sell. I had some Finger. I didn't sell because I thought the squeeze was going to happen. I mean, I've had, mainly because of information in the Morgan report, which referenced information in the Great Taking, both of which I've shared. I have since learned that Bill Clinton's administration changed the rules about security ownership. You and I no longer buy securities. The U.S., I've been saying this for years, the U.S. securities market is a fractional reserve securities market. We are buying representations of securities on a leveraged basis, ostensibly 10 to 1, but it might be 100 to 1. It might be 1,000 to 1. There's no restriction on it. So you got to adjust your reaction to the facts. And the facts are what's in our accounts are just electronic entries, just like what's in our accounts at our bank. If you went down to Chase Manhattan and you said, I want $100,000 out today, you better be a darn good account, because they're going to say, we can't get it to you. Here, fill out this form. Come in 14 days. If 100 people went to the Chase Manhattan Bank in New York and asked for 100,000 out, depending on the time in the cycle, that could start a chain reaction of stress that could require Federal Reserve intervention. A lot of our big banks, including apparently the top ones, rely on cash being delivered in the basement from drug smuggling. That's how tight, that's how leveraged everything is. Well, that same leverage now is in the securities markets. And the way these big funds juice their returns is hiring guys like Josh. Josh didn't know about this. He's no genius. Somebody taught him. My theory is it's a very narrow group of guys that are taught, because it's almost a fraternity. It's like that movie Dumb Fellas. When was his name Tommy? He was going to go in. He was going to become a made man. But Jim, his lifelong friend and partner, literally in crime, he couldn't become a made man because he was Italian. I'm sorry, he was Irish. You could only be made if you're Italian. Well, why does that matter versus being Irish? There's just, whether you get along or not, Italians shot each other. Italians offed each other. Italians didn't, Banga Boomza Bonza didn't get along with Luigi Luga Loga. But as a group, there was something about keeping it in. I don't know why, but in this space, there seems to be that kind of a mafia. And so Josh is taught, if he's actually, he might be just paid to, he could even be lower on the food chain. But a guy like Jeff Easton, he didn't invent this. he's taught by a guy like Stevie Cohen, but not directly. It's not like they met. It's someone on one of the desks, use a burner phone, let's meet, outside of Loeb's, whatever. But it's all done to enhance returns while the banks control the spending of money and debt in the United States, wasting it. But they get to take, look, if we spent 20 trillion borrowed money over the last 15 years for various things, which you could believe or not believe, as banksters, all you got to do is get a lot of that under management, get a lot of that in your products. And if you believe the Toad, I mean, not the Toad, but the guy that writes about the Toad, it's trillions of dollars that goes offshore. So you get the government to print trillions and you take trillions. It all goes to a narrow group of men. But no one cares about that. While we down here argue about women versus men, black versus white, Christian versus Muslim, feminist versus sexist pig. While we argue about all that, Trump versus the wonderfulness of Kamala Harris, who's not even black, she's Indian, but hey, she looks black, so let's argue about that. While that's all distracting us, those guys upstairs, they keep incrementally taking trillions, literally trillions of dollars, but we're not allowed to point it out. We don't focus on it. So, Daryl, what happens is, like with Finger and GTII and others, I no longer believe that under Obama, the banks broke into FDIC sort of boring retail banks and the prime broker side. And then the prop desks, the trading desks, the risk taking went out to hedge funds. Those hedge funds are the same guys that used to be inside. They're now on the outside for the most part. There's probably still risk taking inside the firms, but the risk ends up going to the stock loan desk and to the whoever handles, I assume it's investment bankers, handles the derivative department. That's where all the money's made now. I believe it's on the prime broker side. But to the extent they can put it on the taxpayer guaranteed side, they will. But they leverage it all up, and the commissions and the stock loan and the fees for margin and for the derivatives more than make up for the fact that went outside of the bank. So that what's one of the key ingredients? They had to teach guys like Jeff Lind and Kurt Kramer, a failure on Wall Street, how to get suckers like CEOs who are good guys and girls to sign up. And then you hire these guys, you set up IR departments, you hire these guys, this goes on and on and on. And so for me, Daryl, just talking about myself, when Finger was up and GTI was up, I should have sold. I didn't, because I actually believed the essence of the story because I used to live it, Daryl. I had accounts, and I was a big producer, at least for that time frame. I was a top President's Club major producer. And the chicks dug me back then. I had business cards that made me seem like I was really something special. But I had a lot of positions where clients would sell stock with delivery, and it was rigid. It was bloody rigid. And it particularly the time frame that got difficult was 21 days. And companies like Bear Stearns used to provide a service where you could move the trades for a fee over to them. But I didn't have that kind of capital access or attorney access, or I don't even want to call it good old boy. It's some other network. I didn't have access to that network, that shady, short selling, trading, scummy business that Josh is in. So what would come usually, not necessarily I was a big producer, so I could call the regional guy, I could bring my boss in, I could talk to the operations department in the morning and then go out and have coffee with my friends and not show back until 4:30. And everybody's at my door, Ralph and Vern and Bill, they're coming, hey, we got this, we've got that, what the hell? Well, I'm buying you in tomorrow morning. We should have done it today. I'm buying you in tomorrow. No, it'll come. I'll talk to, next morning. Ring, ring, ring. And we didn't have cell phones back then. Wait, where is it? I got to buy you. No. I talked to my client last night. It'll be here by 2. Don't worry. But, I'm going to talk to George. George, what the problem is, Billy, is that, this is the 23rd day. And when do you say it's going to be here? Well, I think it'll be here by 4. Well, let me see what I can do. Hey, it's George on. Yeah. Well, I'll tell you what I can do. If it's in by 3:30, 3:45, you're all right. But if it's not here, I'm going to tell Vern to go ahead and buy you in. Well, thanks, George. That's great. That was great. And that's what would happen. And so I lived it for years. So I believed the basis of the story. But it's bullshit. There are no buy-ins anymore. Wall Street's in on it. Look, they're either it's a big conspiracy or they're following the rules. It's not both. It's not both. It's not both. So what I made the mistake with Finger, Daryl, is when it went to, almost 9, I should have sold everything. I should have sold everything when everybody raced to COSM. I should have recognized this is going to gain momentum. So it's a lesson learned, but you got to learn those lessons. You can't be like David, who insists in the face of it that he's right and I'm wrong. I lost money. That redoubles learning the lesson. It really does. But it's, I don't know, everybody feels good. Some people feel good losing money. Some people feel good hanging in there, taking one for the team. But there's no team. Every single person, Daryl, you're listening to on Finger is looking out for their own self, as they say down in the South. Every single one of them. Except I would say Martin. I'd say Martin is a sincere leader and CEO. And I think he truly cares about his employees, his customers, and his shareholders. But that doesn't mean he knows what the hell's going on. I mean, it's so many skills the CEO has to have: running the day-to-day, leading the team, allocating capital, financing it, screening out the scallywags from the the people that you can maybe help, that can help you. And the hardest thing about a CEO or any job that I find, whether it's individual or an office, is picking up the phone or going in person when your armpits are starting to sweat and you're nervous and you're out selling, you're out producing, you're out actually interfacing with clients and or asking to raise money, and you're making those calls that are difficult. It's not that difficult to go to a conference and get up in front of a room and talk to a room. Unless you're Barbara Streisand or something, and you have stage fright. But otherwise, that's not hard. That's not really the hard work. The hard work is going as a CEO, going and raising the money. And what CEOs normally do, they get wooed by Josh Moore's friends, and they sign one of these just horrible deals. Feels good in the moment. And they lied to, they know inside of themselves they made a mistake. Or they're in on it. There's nothing like being a CEO of genius brands, traveling, building hotels in the middle of beautiful women and palm trees and breezes, and doing it for 5, 6, 7 years. You don't want to give it up. So whose side are you really on? Anyway, Daryl, I got off a track, but my point is the hardest thing is to sell. So even if one of these stories works, and let's see if any of them are right now. Railtown's not working. It's down a penny. Fingers down 3.5 cents, 126. Genius Brands, so obvious. It's down 10 cents. It's at 75 cents. G-Bucks is up 2 cents, 14 cents. GDC down 4 cents. So even, Daryl, let's say somebody was so in awe of Mark Bazile signing up. That's great. And they knew, they halted, they knew to buy GNS. I don't know if they could buy it on Friday, but they knew to buy it in the opening tomorrow. It went to 156. Maybe they bought it at the wrong price, but maybe they had purchased it at 60, 70 cents. Did they know to sell it today? Probably not. Not after listening to the charm stories. It's a real tough thing to sell. So it's one thing to come on here and tell me, well, we could have been making money elsewhere. Look at this stock, it's up. Well, oftentimes those people saying it didn't predict it. They're just coming in afterward. And number two, when you own the stock, it's very tough to sell. If you bought the stock thinking it's going to go to 150 GDC or G-Bucks, that's what it was. G-Bucks going to go to 150. How can you sell at 8 or 9? Well, now it's 14 cents. It's just a tough. So I'm not blaming anyone, Daryl. I'm not trying to disparage anyone. It's just a very tough game to win. Railtown, you buy it at 41 cents, and I think you can see a buyout of the stock by Microsoft within 6 to 9 months. Is it going to take longer? Sure, it could. It could be 2 years. But my opinion, if Microsoft doesn't buy, or somebody doesn't buy them within a year, well, they're going to lose the race because Sequoia's backing Langchain, and some other huge pool of money will back Chain Gang, and another one will back Gang of Four, and you know, Railtown's there's a race to buy these companies, but Railtown also is in a race to claim 5, 10, 20% of that 300 billion a year. And they have great engineers, they have great software, great talent. But the way to do it is to sell to Microsoft or Oracle or AMD, who can throw 100 billion at the problem, and then everybody makes money. So I think it augurs well for an early buyout, not a later buyout. But we'll learn more about that as time goes by. But Daryl, the good thing about Railtown, if I'm right, you don't have to make a sell decision. You just got to make sure. We've got to stay alert to risks, and frankly, there could be some things that come up that I'll come to you and say, it didn't quite turn out that way, but here's the stock at this price. I will do my best to give a full lay of the land read, but it doesn't mean I'm going to be right. But and there are no charm boys in on Railtown, by the way. There are none. And maybe Twinkle Toes the Tiger is, but I don't know. All I know is I'm not getting anything to do this. Hey, Steve. How are you? Speaking of a guy that I was hard on over the airwaves here early on with Steve, I can't remember which stock it was, but I came close to ridiculing you, Steve, by saying something like, I can't remember, but I couldn't understand your thinking. And to your credit, you didn't have hurt feelings, and you looked past my rudeness or my obtuseness, and you said, well, is he is he calling it the way he sees it? And anyway, you sold whatever it was. I think it might have been G-Bucks at $6 or $7 maybe, or $5. I might have the wrong one. $2? I don't remember. But you you made a huge position in Railtown. I think your price is still lower than here because you've been adding. And you had also listened to me on silver. So, Steve, you're a perfect representation that you can't fall in love with the story. Selling a stock doesn't mean you're giving up on the management or the story. It just means you're putting it back on your wish list maybe, and that you're putting it back in the stable while you're riding another horse. And that's normal. That's normal. Railtown now's 4 minutes to go, 41 cents. 40 cents on the bid, 41.5 on the ask. It's 12,500 by 4,160. Only 80,000 shares traded. And the last trade was 10,000 shares at 41. So I believe, but I cannot confirm, that 10,000 was motivated as a buy order, not a sell order. But the previous close was 41, so maybe that came in to try to get the stock in the red for the day. They love that. They love preying on your emotions. There's no way to tell you this without telling you where I heard it, and I don't normally speak like that unless it's with somebody else that is sharing a similar, call it journey or something. But yesterday at Mass, the priest talked about how he had gone to dinner in Georgetown as a young priest with a lobbyist. Interesting, the lobbyist was for cotton and sugar, the two industries that did more to enslave human beings and indenture servitude human beings than any other industries, and spread the British Empire and other empires and the banking. Oh, very interesting that one lobbyist would be for both. But anyway, they sat at dinner, and the couple next to him, a woman, obviously was very upset to be sitting next to a priest. And when they left, the priest apologized to the lobbyist, and the lobbyist said, "Father, never apologize for being a priest, because you represent the Lord, and he took this kind of hatred and disrespect, whatever, when he was alive, and no, don't ever apologize." So he told this story, and he started then talking about how we should not respond in anger to people who insult us or attack us, unless it's professionally. Then you need to protect yourself. But he went, and I'm not trying to go off into that, but he went that you're closer to God if you're experiencing those kind of attacks like he did. But the one thing he said is, and that's what I want to bring up here, he said is, you got to remember that who you're fighting. And I don't remember ever hearing this. Maybe it's me. I don't remember ever hearing this in a Catholic church before. But he said, you're not fighting that person. You're fighting the evil one. You're fighting the devil. And so that's the point I'm trying to make here with all of these guys like Josh and the rest of them. We can get angry at them individually, but that's not who we're really fighting. We're fighting an evil, which, once set in motion, takes on a life of its own. But we are fighting an evil. And that evil doesn't care about you. It's like the Terminator machines. They don't care about you. So anyway, I apologize. I'm not trying to proselytize at all, but I didn't know how to tell that story any other way. All right, so Finger has a bid of 125. And the low today, 125. Railtown closed down 0.001. So they couldn't close it at 41. They closed it at 0.409. 81,600 shares. 800 shares just simply had to sell at the last. And nobody investigates. Nobody investigates. That's manipulation. That is against the law. But no one investigates. Anyway, it'll end soon. It'll end soon. Looks like GNS continuing its slide, 76.5, G-Bucks 14 cents, GDC 479, Finger 126, and Railtown 0.409. Just doesn't, this delay just never, we need some surcease. All right, let's keep going. Sorry. Justin Babish. I wish I'd sold my finger when it hit $5 or $4 or even $3, but I didn't. Not making that mistake again. It's hard though. It's hard. It's really hard. When stocks are going up and everybody's in on it, everybody's saying, and the people are making money, it is the hardest thing to do to sell. When I sold everything that and I'm talking, 1,000 shares, 500 shares, 2,000, everything I had left, and put it in Railtown. And I paid more than most of you did for the next, if you bought it over the next 1 or 2 weeks. I think I paid 34.7 or 33.7, something like that. But I didn't want to look at my screen. I didn't want anybody to tell me about any of the other stocks because I was sure I was going to miss out on a squeeze. It's so hard because everybody's talking. It's so hard to go against the crowd. Particularly if you're large, it's hard to go against the crowd. I just saw GTII's up 50%. Who the hell is buying that? All right, let's keep going. Justin, but RT has this business model, I think you mean, where they have built the revenue from the bottom to the top. I have a feeling it's going to come in quarterly reports more so than press announcements. I actually agree with that. I think it's a great point, Justin. How are they going to tell their revenue story? Unfortunately, CEOs and companies, longs, they're not allowed to promote their story. They're just not allowed to. So if I'm the CEO, let's say of Railtown, which I would never be, of course, but if I were the CEO, could I come out and say, we're going to do 100 million revenue run rate by the end of January in a press release? I can't do that. That's promotional. That is promotional. Could I answer a question on a public earnings conference call that an analyst asks, and it's taped and the whole world can listen? Are you comfortable with the analyst's projection of 100 million next year? Well, if I give a caveat, well, I can't really comment on that, but I did read where, whoever the analyst, Josh, wrote, and, it seems reasonable. I think I can say something like that, but I'm not allowed to be promotional. So where will the revenues be announced? I believe that Corey and Marwan, Dr. Kaur and Mike Nobrega, the whole crew, I think this is their golden ring. And I don't think they're going to make any mistakes. So I think they're going to be very cautious about being promotional in that way. Obviously, they have a right to put together a corporate presentation. They have a right to talk to accredited investors and institutions in one way. To retail, it gets trickier. So I think, Justin, you're right. I think revenues are going to come out in two ways: quarterly and management discussion and research. I don't think the company is going to be able to um, connect the dots for us. In other words, if AIP network moves 200 million in hosting fees to TELUS at an eighth, 12.5%, that's 25 million in revenue. They may not be able to say that. But an analyst can look at it and say, well, look, the typical revenue deal is, I don't know, I made up an eighth. I have no idea. An eighth. And they should have a transfer of at least 75 to 80% of their current 250 million. I'm making that number up as well. But an analyst could do that. And then the third place revenues are going to show up, Justin, is behind the curtains that we are not invited. A curtain of investment bankers, a curtain of a trading desk, a curtain of research analysts inside an institution, like the Mavericks 2 fund. They can make their own projections. They're not public. They don't have to publicize them. They can talk to the company. That's the other place revenues will show up. I don't think revenues are going to show up in news announcements. Let me say it again, a different way. I don't think revenue projections are going to show up in news announcements. Revenue past, printed, audited, those could show up, and certainly in the quarterly financials. Trends and size of market and penetration, those kind of things can be broadly acknowledged. But Justin, CEOs cannot be promotional. So do you see how it's a setup for the shorts? Okay, so Justin says, Railtown has this business model where they have built the revenue from the bottom to the top. I have a feeling it's going to come in quarterly reports. I agree. More so than press announcements, unless it's a big contract with a dollar value locked in. All right. Yeah, I suppose if money's changing hands or the contract has a revenue certain or a fixed price, I think you're right. They could announce that, but they can't be promotional. Actually, they're probably trying to sell products all over the place, not only TELUS. See, you're smart, Justin. Did I ever get upset with you? Because you're pretty sharp. Maybe you should. Maybe you should run this discussion. Yeah, I think they're working on other things. That's my opinion. Not only TELUS and AI partnership members, they are all, yes, I agree. I think they are going to engage a much broader audience. Look, it's $300 billion. TELUS doesn't have even a tiny bit of that. They only have a tiny bit of that. So they're going to go out elsewhere. And they're already partnered with Microsoft, AMD, um, um, NVIDIA. It's pretty important. It's pretty impressive. Rebecca Kurzweil just released an interview with Netramark AI, who's an affiliate of AIP. All right, Eric, we'll listen to that. We'll listen to that. She's gonna build up a hell of a network. It's a hell of a thing, building up a network. All you have to do is be beautiful. Now she did a great interview last time. Richard K. Hello, William and Luckily. I got my duffel bags to fill with. I've utilized all my opportunity to accumulate Railtown, but I am running short on time to wait for it. That I understand. I don't know the answer there, Richard. Richard, if we're lucky, there's two ways this story could hurry up. One is, I don't want it to happen, but ostensibly there's a large short position. I do not want a short squeeze, but it's possible. So that might be one way you can fill up your duffel bags. But I don't, if that starts to show up, we're going to have to talk about it and have an all-night session. Because anyway, let's not talk about that now. The second thing is, Richard, if I'm correct, which I could be wrong, but I believe there is an arms race. And all it takes is two buyers. Let's use Microsoft and NVIDIA. They're partners with both. If Microsoft, and I'm making this up, I don't have any line to anything, any likeness to real events is completely coincidental. But if, let's say, in a meeting in December, Corey is able to show to Microsoft that they're going to need, I don't know how to make it up. They're going to need additional resources dedicated to Railtown because Railtown's imposition on Microsoft's partnership is going to go from whatever it is now, it's going to grow by 100 times to some big number. Well, if that gets back to Microsoft's acquisition team, Microsoft might come in and say, you know what, we want to buy you for, I'm going to make it up, $35 billion. And that sounds great. Well, okay, we've got shareholders. Let me put it before the board. All right, I'll get back to you. Well, maybe one of the board members knows someone at NVIDIA and says, don't quote me, but Microsoft is bidding. And NVIDIA comes in at, $25 billion. And the company says, well, that's great, but we have a higher offer. We can put both of these out to shareholders for a vote. And so NVIDIA comes back at I don't know, at 30 billion. Microsoft is 35 billion, and Nvidia's deal is $5 cash and 25 billion in Nvidia stock. Microsoft's is entirely stock. So there's a qualitative difference, and it goes to a vote. And during that voting period, Nvidia can raise their price because now they see Microsoft. Microsoft can raise. It's all you need. And so, Richard, that could happen quickly. I don't know what your fuse is, but that could happen quickly. It'd be a shame if you have, let's say, my Railtown goes to uh, 350 by the end of the year, which I think was my original, not my original, but my more recent. Yeah, there it is. I'm not erasing it. 350 by the end of the year, a high of 425 in December. If it goes there and you have to sell, I mean, everybody's got to do what they have to do, but it'd be a shame. You won't be able to get back in, I don't think. And that's just the starting point. That's not the ending point. Um, unless what you need the money for is uh, uh, you know, you're getting your mother-in-law rescued from North Korea. Um, I wouldn't trade Railtown stock for another trade. I would not put it in another trade I know about at 350. At 350. Mike, Eric, not sure about that as Netramark trades on the over the counter. Well, not all of the companies in the AIP network, I don't think that's a prerequisite that they're all private, but I'm not positive. Um, AINMF, AINMF, and it's called, what is it called? Netramark AI. Netramark. Let's see if I can find it. AIP. What is Netramark? Is it well, I can go through them. This is an old list, so it doesn't mean it's here because they've added something like 15 companies. According to the sales pitch, the presentation. I'm going through, you can, each of you can do it. You can go to their website and you can go down the affiliate list. It's called Netramark. It's a long list. All right, it's not, I don't see it there. But it doesn't mean that it's not, because this list is, I don't know, months old. Eric said, Rebecca Kurzweil just released an interview with Netramark AI, who is an affiliate of AIP. That doesn't, as Eric says here, Mike, AIP affiliates are not AIP owned, just affiliates. And then Eric, okay, Mike was right. Okay, my mistake. Netramark is not an AIP affiliate. I cross-read something. I'm Homeless Legend. He always has great names for the day. Always has great names for the day. Maximum Monday, I'm Almost Legend says, Maximum Monday, I am Maximus, son of a true king. I am Maximus Decimus Meridius, commander of the armies of the north, general of the Felix legions, loyal servant to the true emperor, Marcus Aurelius, father to a murdered son, husband to a murdered wife, and I will have my vengeance in this life or next.
Why doesn't the hero reveal himself and tell us what we're building? You do have a name. My name is Gladiator. How dare you show your back to me? Slave! Look, remove your helmet and tell me your name. My name is Maximus Decimus Meridius, commander of the armies of the north, general of the Felix legions, loyal servant to the true emperor, Marcus Aurelius, father to a murdered son, husband to a murdered wife, and I will have my vengeance in this life or the next.
Okay, so Maximus Decimus Meridius Monday, Sir William. You seem frustrated today, so for your entertainment's sake, AI has some info for you in regards to the pace of the merger completion in summary. I am Almost Legend. Legal language often appears verbose or overly cautious to protect all parties and avoid future disputes and cover the rear end of the attorneys. This careful drafting may seem polite or soft, but it doesn't materially delay the closing. My point on polite is that it shouldn't have taken, I would never, but you know what, I don't know what the hell I'm talking about. It's easy to criticize from the peanut gallery. Nobody knows, and there may be a reason. It doesn't materially delay the closing. Delays come from approvals, exactly. Verifications, yes, that's true. And meeting deal conditions. Yes, one deal condition that could be in there would be they wanted every single affiliate to re-up their commitment because they were paying out 50 million shares and they wanted to make sure that the affiliates would in fact transfer to Railtown in the acquisition. And I could see that taking time. And in fact, would mean everything that I've spoken in frustration and in criticism would be totally out of line, totally out of line. And that would be something that could delay it. I could see that taking months. So that might, something like that. Railtown's merger involves 50 million shares, milestone-based payments, AIP's affiliate network. The complexity alone is enough, I'm Almost Legend says, to explain a slower timeline. Yes, that's true. And it's very reasonable. You are being very reasonable. Also, for what it's worth, research shows diverse teams do not slow deals. In some cases, they improve decision making and efficacy. Efficiency. Harvard Business Review, 2020. Harvard. Deal duration correlates with deal size, complexity, and sector, not the personal characteristics of the counsel or panelists. Hey, if Harvard says it, it's got to be right. It's got to be right if it comes out of Harvard. Yeah, fair enough. Fair enough. It's just so much easier to blame people. You're right. You're right. I'm Almost Legend. David Hendricks, I pray you're right. I hope so too. Justin Babish, who's going to lose the 120 million when AIP members move hosting to TELUS? I don't know that answer, but it'll be other data centers. I don't know where they're hosted now. Some of them might already be at some Canadian data centers. Some might be in the United States. I don't know the answer. But implied in your question, there may be delays. There may be breakup fees. You know, it's a lot like buying a baseball player mid-season, or buying a whole brokerage team. There's there's a lot of loose ends and things to sort out. But you make a good point. You make a good point. Somebody's going to lose that revenue. Justin, do their clients want them to change? I doubt it. There may be breakup fees. There may be legal, what do you call it? Estoppel. Let me look up estoppel. I might be using it incorrectly. The principle, estoppel, the principle in law which precludes a person from asserting something contrary to what is implied by a previous action or statement of that person or by a previous pertinent judicial determination. Maybe estoppel doesn't apply to a contract. But yeah, there may be ways that the current host can slow down or even halt the transfer. But I would imagine it's just transferring your Verizon phone to AT&T writ large, or transferring your I can't think. Your Disney movie channel subscription to Netflix writ large. Complicated, annoying, breakup fees, but it'll eventually get done. What if RT's new business partners in Canada are so successful at taking away business from the big US companies that someone from the US says, buy out RT for $100 billion. And pulls technology out of, I don't know where the rest of that goes. $100 billion. I don't know. It's possible, but that seems high. Of course, every number seems high, but I think 100 billion seems high. I think something in the 30, 40, 50 billion range feels about right. But who the hell knows? I don't know. There's so much guesstimates, because we don't have the information. We really need information to fill in some of this. And I think it's coming soon. I think it's coming soon. Hey, Tebow, how are you? Go Hawks. I love all the positive sentiments, and I'm also very positive on Railtown. I would love to have a higher stock price now, but I'm not looking at long-term capital gains until mid-2026, so I'm sitting tight. Exactly, but even with long-term capital gains, it doesn't necessarily make sense to haircut your equity increase. It's like, I just went through this, much to my discouragement, but it's like if you've owned a home for 23 years and you've built up all this equity and you don't really want to move, why sell it, pay commission, pay taxes, pay the transfer costs, get off the equity ladder and go rent somewhere? Why do that? Because you're booking massive gains that you have to pay taxes on, and it's an unfortunate reduction in your net worth. Rather, it would be better to not sell and again, my boogeyman, I have no idea. I'm just using it because it's easy name. They're a partner, it's an easy name. Rather, just let Microsoft buy it for stock, and you automatically make that leap, again, all out of my own head, from 40 cents, goes to $4, goes to $40, and maybe they come in and buy it at $75. You make that whole run into Microsoft stock without paying any taxes. And then you make a new decision. And of course, we might be facing corrections in the market. Microsoft may not be the strongest of the so-called AI companies, the Magnificent Seven, the MAGA Seven. So you'd have decisions then, but at least you'd be making that decision from a lofty increase in your net worth without owing taxes. And that's significant. It really is significant. Dennis Alex, so you're pushing out the $55 share forecast. Did I miss a new date? No, I didn't push it out. I'm saying $55 by May 5th. But I'm acknowledging I expected this, I don't know what to call it, the ending of this period of limbo to have come back in September. So I could see, uh, on the one hand, I could see a delay, very easily see a delay in that number um, beyond May 5th. On the other hand, like I've been trying to explain, maybe ineffectively, I think the uh, incentives, again, let me just use Microsoft. I think the incentives on Microsoft's side is to win this race, to buy this technology while it's cheap or cheaper than it's going to be. And the incentive on Railtown's side is you've got to hit while the iron's hot, but also you need the oomph, you need the cash, the technicians, the banking, the other relationships to establish your beachhead and go into France. You've really, there's incentives, Dennis, on both sides to accelerate an acquisition of Railtown by Microsoft in my storyline. So it could happen very quickly, and that $55 may not wait till May. We don't know. I will adjust everything as information comes out. But the reason I use May partly is just memory. 55 by 55. But I'm also not doing that just to be Barnum and Bailey. If the revenues accelerate and the knowledge of a forward 12 months is convincing to one or two institutional buyers, and they compare it to Langchain or to Soundhound, you're going to see that price, all the value of the company also accelerate to the upside. So yeah, I stand by my May 5th target, but I'm also acknowledging it to you that it's high. It's a complete unknowable. I'm making a lot of assumptions. So it's subject to change as information crosses our knowledge screen. But yeah, Dennis Alex, why is against the law to sell 800 shares? Please explain. Oh, let me see. You're talking about the last, 800 shares at 1536 at 409. Number one, they don't own those 800 shares. Number two, it's clearly to manipulate the price. That's illegal. So you don't own the shares. While everybody looks the other way, that's not legal. Um, uh, the law is, Dennis, that you have to locate the shares in writing before you sell them. That means borrowing them, delivery. But in practice, what happens, they sell stock, they lie on the ticket, they lie to the person taking the order, but really it's all done electronically by computer. So the real lie comes by the attorney who helps fill out the paperwork to get approval with the prime broker just to keep mimeographing shares. So that's not legal. Um, to do it for such, obviously, you're selling 200 shares worth. That's not a strategy. That is, and that's probably not a game. That is to manipulate the closing price. That's illegal. If you're doing it with anybody else, it's collusion. That's illegal. And if a long, Dennis, came in every day and bought 800 shares at the end of the day, the long would be investigated. The long's account would be closed, probably, and any profits would be removed. And the long may be restricted for trading for a year or some number. But shorts get to break the law all the time. It is illegal for that reason, at least to my eyes. And it happens all day long. Steve, ZJYL took a massive loss, sold at 68. Okay. And it has been down since. Bought Railtown in the low 30s. Best call ever. I was stuck thinking since I lost in JYL, I had to make it back in Z. See, that's how to, there you go. We all have those, and I'm guilty of it. I had a friend once to tell me I'm in some situation we were in together that I had black and white thinking. And we all need all of our jukeboxes need all of our pinball machines need a push, you know, a tilt now and then. We all need a tilt now and then. Good for you, Steve. Justin Babish, I looked at AIP's membership on their website. It did not mention Metromark, but I did see that interview with Rebecca. Also, nice looking company. Account settings. Good afternoon, William. How are you? Hello, everyone. Where do you think the stock would be by next Friday, 11/28? I'm waiting on some funds to buy more Railtown. Next Friday. Well, it's possible next Friday the stock is still in the 40 to 50 cent range. But I'd be really disappointed if that's the case. But it's possible account settings. It could be that the discussion of revenue is going to have to come through the obvious opinion and trained interpretation of research analysts. And they may not, depending on when the AIP deal is filed, they may not it's possible some of the research may not come out until the first week of December. I will give you a caveat, though. I think that Capital Research Group, uh, they know the story. They put out a target of $2 a year and a half ago. They have, to me, a reputational commitment to get their research out first. And my guess is, unless I'm missing something, they will redouble uh, or strengthen their opinion that it's going to go to $2 or higher. I don't know. I have no idea. Um, so you might have a shot by next Friday. You might have a shot. D is very positive on the stock. All right, I'm going to go to some of my things I saved to show you. Yeah, I guess I took that down. Sorry, I don't have to show you that today. Boy, you sure have a lot of files. That's what it's going to say. That is what it's going to say. 449. 449. Let's look at whether or not we're at war. Wall Street in extreme fear as stocks plunge again. As fears world's biggest company is a dud. The Dow lost 1.2%. So S&P 1%. I mean, God, it's normal. Bitcoin slid 3%. So Bitcoin's down 25%. That's a correction. So is everybody worried about NVIDIA? Let's see. On Monday, tech stocks were among the hardest hit. Traders nervously clenched their teeth before NVIDIA's Wednesday earnings call. Sell on the rumor, buy on the news. Wall Street is looking for yet another blowout quarter from the world's only $5 trillion company. Anything less risks extending today's gloom. Investors have been flooding cash into the chip maker for nearly 2 years, and to many, it is the bellwether for AI's effectiveness. It'll be, on one hand, important for NVIDIA to confirm that demand is still there, says Ross Mayfield, an investment strategist at Baird. But unless they take it a step further, I think it's only going to leave the second question more open-ended, which is, We know there's demand for compute. So what is the return on investment for the firms that are buying all of these chips? Some of AI's biggest cheerleaders think the technology is going to save billions of dollars in costs. For example, Morgan Stanley estimates that AI adoption could unlock nearly $1 trillion a year in net benefits for S&P 500 companies. But skeptics have started to voice their own worries. Dun, 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 dun. Michael Burry. My Sayoshi-san sold NVIDIA. Who wrote this article? I'm going to guess. I'm going to keep my guess to myself. Well, don't recognize it. Ben Shimkus, U.S. Consumer Reporter. I think it's pretty weak. Okay, let me show you what I want to show you. Step right up. Come on in. If your theory requires hiding the evidence, it's not a theory, it's a story. Ken Fetter. I don't know why I wanted to show you that, but I did. Let's see what this says. Finger at $1.30. Most will find today's PR a non-event. My take is a perfect time to be building position at low end of trading range. Agree, but stocks, buy, I guess. Buy stocks when nobody wants them. And this is a positive event. Let's get the details of how many warrants and what strike price. Step right up. Come on in. If you'd like to hear the story. All right, so here's the excerpts from the S3 filing. Another reason to be optimistic at low end of trading range. Significant incentives provided to various investor relations and strategic. You can't read that, but I'll read it to you. I'll read it to you. Okay, on October, this is the top yellow. On October 20, we entered into a consulting agreement, the Dorado Consulting Agreement with Dorado Goose, with respect to investor relations services, strategic communications, and related advisory for 4 million shares of common stock. 4 million shares? I've heard of advisory services, 50,000, 100,000. 4 million shares? Oh, they're warrants. So it's an aggregate of 4 million common stock purchase warrants. Sorry, it's hard to read. of which 3 million warrants shall have an exercise price of $1.65 per share, and 1 million will have an exercise price of 2.15, all of which warrants will expire in basically a year and a half. No. Yeah, basically a year and a half. That's a lot. 4 million. And then on October 27th, we entered into a consulting agreement with the Sandberg consulting agreement, Sandberg and the other fellows, with respect to assisting and advising with capital raising opportunities, digital asset treasury strategy, and investors relation for an aggregate of 100,000 shares. 10,000 shall be issued at the end of the first full calendar month, and an additional 10,000 at the end of each month. 300,000 common stock purchase warrants shall have an X price of $1. That's a shitload. You guys tell me about dilution all the time. 4.5 million for what? But fair enough, the exercise price is higher than where the stock is now. That, to me, that's not a good deal. But it's not, it's not. I'm a little confused. The selling shareholders, Craig Cardillo, Dorado Goose, and Sandberg Group, are offering from time to time. Oh, yeah. So they're going to be able to sell their stock from time to time. This stock they're given. Guys, it says here they can sell from time to time 4,360,000. I guess you think that's a good thing. And I'm not going to argue with you. It's not worth arguing. Finger 135. Most didn't like it back in April either, but May turned out to be a different story. Sold a bit too early in that run. By the way, I called that run. I'm not saying I'm better than anybody, but I called that run. Won't make the same mistake this time, accumulating, swing into year end. Whatever. I think it's foolish. But if you're accumulating, you're dollar cost averaging. You're not putting it all up. Now, see this chart? You can barely see that chart. You can't see it. But if you look at it, that is one dead stock. That is one unattractive chart. But hey, it's not saying that next year it won't have a run. All right, let's go on here. All right, I think this is the first one. Now, I just want to pull out some pages from the presentation that I've shown you many times from November. Here's the Railtown Partners. And you see right across the top, they're a member of Microsoft Founders Hub. They're a member of Microsoft Partner. And they're a member of Microsoft Code Cell Ready. They're a member of NVIDIA Inception Program. They're partners with TELUS. And then you've got some of these think tanks, but the key and digital for whatever it's worth. But also down here you have AMD. So that's the presentation going out to institutions now. Now, here's the problem. And I tried not, it's a long presentation. I tried to go with the pictures because it's easier to read books with pictures in them. The problem is data fragmentation. None of the prominent data providers seamlessly integrate and understand the full scope of a client's application. So you've got GitHub and Jenkins and Google Drive and Azure, different ones. They all go into the Conductor platform. So that's the solution. Data unification. Conductor provides a single platform that comprehensively ingests and unifies all application data in all these languages, whatever the language, and it makes sense of it all. On the surface, that seems pretty powerful. I don't know what webhooks means, but so you have ingestion. So you have customer RAG, Apache Kafka custom pipeline. Well, over here, back and forth, the compute power used for that ingesting is TELUS. Storage, you have database, vector store, and file storage. You come over here, that storage is TELUS. AI services, agents, copilots, assistant, chatbots. Again, all those models are run on TELUS. I think there's going to be a great deal of cross-population using TELUS data center, which means revenue back to Railtown. But we'll find out. We will find out. Here's another picture. This is the Railtown AI and TELUS Corp Compute partnership. So up here, you have TELUS Conductor and TELUS LLM, large language models, and TELUS something else I can't read. But then the arrow that goes down, TELUS to Conductor platform. It says upsell to Conductor platform. So TELUS is going to upsell their clients to the Conductor platform over here. And then you come to Conductor, and it's I can't read those, but it's the whole Conductor ecosystem. And then you have Conductor Cloud Agent Hosting, which is then, you see the arrow going back to the TELUS AI Factory data center. That's for the models and the compute power. Down here in the big yellow circle, Railtown Agent Factory Consulting. So you build your agents on the Conductor centers, and then you build the agents on the TELUS data centers. That seems like a lot of revenue and hosting going to TELUS, which then comes back in a revenue sharing agreement to Railtown. Not to mention that Railtown also has their own revenue deal with each of those parties. Okay, so here's the Railtown revenue model. This is all in this presentation. Railtown AI Technologies is monetizing its newly announced partnership with TELUS through the deployment of our agentic frameworks within TELUS's sovereign AI data factory. While TELUS provides the hosting, okay, that's one side of the deal. While TELUS provides the hosting and compute infrastructure for large language models, Railtown contributes its proprietary agentic frameworks. That's the other side. These agentic frameworks are tools that enable the creation, orchestration, and management of autonomous AI agents. I assume other people's agents. Hyperscalers like TELUS require frameworks or developer toolkits, ADKs, to make their hosted large language models truly usable. Hyperscalers like TELUS need Railtown to make their models truly usable. Without these frameworks, it is extremely challenging for customers to build, deploy, and interact with AI agents effectively. By combining TELUS's secure domestic AI compute environment with Railtown's frameworks, customers can efficiently build and deploy AI agents while ensuring their data remains in Canada. The revenue model is usage-based and directly tied to the success of AI deployments. For every agent built with Railtown's frameworks and deployed on TELUS's platforms, Railtown receives a net percentage of the compute revenues generated by TELUS. This aligns incentives between the two companies. Okay, this is the AI partnerships at a glance. And if you go first to the summary up in the right-hand side, AI partnerships is a network, over 170. If you go to the left under profile, it says 180 plus, whatever. So over 170 affiliates with a combined 400 million in revenues and 5,000 end user clients. So it's either 170 or over 180, but it's 400 million and 5,000 end users. If you come down to the acquisition plan on the left, they've already identified 3 to 5 shortlisted acquisition targets from the affiliate network, and they're going to take advantage of their prior experience working with those companies. So they have a strategic plan to acquire early stage AI companies at a discount and then spread the costs over all the acquisitions. A little bit of what they call synergy. All right, so the accretive strategy, they have a platform that's going to allow for discounted private company acquisitions. And then down here, it highlights that they're all OMERS guys, or a lot of them are. Railtown AI Technologies and AIP partnership, a transformational coming together. Overview. An established network of over 180 AI-driven affiliates with proven $400 million annual sales footprint. Over on the other side, AI services growth potential. The newly integrated platform, that is the Railtown platform, but AI also, the network has a platform that they developed. But they're going to all combine, aims to have multifaceted growth potential. On the monetization side, It allows for the integration of Railtown AI Service Suite to deliver the existing network high-quality AI service solutions, and it activates ensuing revenues for Railtown. In other words, one of them is the TELUS Railtown revenue sharing. From a growth perspective, the network's expansive nature provides significant opportunity for organic network growth, with new customers further growing service revenues. So here it is, a fully integrated technology marketplace and cloud service. AI Partnerships is 100 plus affiliates, 180 plus. Railtown AI Technologies is our company. They have Conductor Cloud, Conductor DPE, Conductor RCA, Conductor RAG, and Conductor ADK. It's all as an interface with the 180 affiliates using the sovereign AI factory that TELUS has built. And as it goes through this interface or this tool, it creates revenue that TELUS charges to the 180 affiliates that transfer. So you have shared compute revenue, shared compute revenue. This is a big deal. Just because it doesn't show up in the stock price doesn't mean, to quote Joe Biden, that it's not a big effing deal. I guess I'm gonna show you guys one sort of societal thing, but whatever. The experiments we're making in the United States are not going to end well. So it's all by way of emphasizing how important it is for each of you to build your own financial central bank, your own financial castle against the world, because things are going to change rapidly. All right, so here we go. This is the Railtown combined competitive moat, if you believe there is such a thing. This is Railtown combined with AIP. One, you've got network effects. End user access to the growing network of 170 affiliates. Cross-selling by affiliates to the 5,000 plus end users of the affiliates, including Railtown Conductor and related products and services. That's one. So you have access to this pretty impressive network to cross-sell and accelerate revenues. Number two, switching costs becomes a problem, which somebody pointed out it might be something to deal with in the hosting too, but switching costs. The affiliated network provides proprietary enterprise application software. So there's a high switching cost, which creates stickiness to move to alternate application software. Brand recognition, yeah, it's good. It's good to be king. Access to capital, yeah, okay. But this network, for a bunch of reasons beyond just capital, provides the ability to the network members to scale quickly. This is important for all of them. I don't care about IP that much. All right, 6, platform capacity. Opportunity to move acquired and non-acquired affiliates who currently spend approximately $120 million per year with various hyperscalers. It gives you a chance to move them to a common lower cost platform. That's TELUS right there, 120 million. It's in the corporate document. And that's revenue smack dab in your face. Provides the capability to integrate affiliates' application software on a single platform. Exactly. It's a vertical market. So the vertical market software, such as Railtown's Conductor, will be offered to the affiliates and their end users. And then, of course, over here, there's economies of scale. Now, I reread this, well, all right, never mind. First, I want to go through this. This came, I think, from Motley Fool. Here's your 10 buyers. And here's also 10 companies that everybody calls AI. It's also 10 companies who whose fortunes everybody's describing as AI. But I'm not sure the connection with Railtown. But anyway, these are things to look forward. I would say that Meta platform, maybe Tesla just because they're so exposed and shorted. But if it gets to a point where we want to buy puts, maybe Meta's one to do it on. But anyway, I just wanted to show you those names. We'll go over those tomorrow. Oh, here it is. Yeah, this is what I wanted to show you. Railtown collaborates with TELUS. This is a really boring announcement. It doesn't really tell you much. Railtown AI will deliver cutting-edge AI-powered development tools to Canadian software teams while keeping code, data, and intellectual property securely in Canada. I don't think this news release tells us the whole story. So I'm looking forward to more to come and Mordecai. And I might leave the rest of it. I might leave the rest for tomorrow. It's 5:20. Let me just see if there's any war or anything like that. Bubble on the brink. Guys, this is probably more of a buying opportunity in the market than a time to panic. But, you know, anything's possible. Mexico's erupting in revolution. The world is in the middle of change. Wow, Snap, $9 billion monthly program. if we save money there, we could send it to Israel. Water's a problem in Iran. I've been reading that. Anyway, all right, everybody. I think what I'm going to do is sign off. I appreciate your attention today. I didn't mean to at all to be negative. I am a little worn out. I get a little bored saying the same thing, but I'm really excited for Railtown, and I hope by Wednesday morning we get a filing on the AIP transaction, and then we can start really moving ahead with the story. And it should be fun. It should be fun. So until tomorrow, I hope each of you are well. And no, you're not. No, you're not. And, you know, more to be revealed, smoother sailing ahead. And, uh, you know, we'll reconvene tomorrow. So cheers.